how did you even find trading?
But he made a lot of money in crypto, and he would always post on his Instagram like, "Oh, what is that? What is this?"
In general, how do you handle the losing streaks?
Even the best traders on Wall Street, the best top traders, they have losing streaks. Like it's a business expense.
What kind of approach do you take in your trading?
I look at the news, so I have Jigsaw. Secondly, from that, I would then go on to Sierra Chart.
What are common misbeliefs around trading?
First off, do not think you can like turn a small amount of money into gazillion dollars. That's not gonna happen.
What are your thoughts about that, the psychological side of it?
Yes, so I would say that if you want to be a good trader and have consistency, you have to have.
Welcome to the Trading Map podcast, everyone, where we talk about market structure, risk, the long game of trading, and how you as a developing trader can actually get better. Today's guest is Marcus from California, who has been trading index futures for the past couple of years and is building his career in the markets. In this conversation, we discuss the fundamentals of trading, lessons from his trading journey, and practical insights for traders who want to improve their process. If you have your iPad or a notebook nearby, this might be a good time to take a few notes. Let's get right into it. Hey, Marcus. Good afternoon to you. How are you doing?
Good afternoon. I'm doing well. I'm doing well. How are you?
No, things are great. Markets have been a little messy in the last few weeks, and especially in the last 1 or 2 weeks because of this Iran
Yeah.
situation that's going
Yeah.
on. And I was checking out your profile, and I think you trade in the
Yes,
futures.
sir.
Mainly, like you're focused on the
Yes,
futures.
I did stock options for a little bit, and then futures have been my main focus for the past, I would say, 3 years.
So yeah, I mean, I think we can jump into it, and maybe you can start quickly with kind of a quick intro about the trading journey so far. What kind of market? So you mentioned like you have traded options, and then shifted to the futures after that. So we want to cover that, and I mean, I think that will be a great place to get started.
Got you.
How did you even before that? How did you even find trading? Uh, in general, yeah.
So I have a buddy of mine. His name is Ethan. He has been investing. So I'm 20, by the way. So my friend has been investing since we were in middle school under his parents' account. And around 2020, when like the COVID stuff was happening and crypto was shooting up, he made around, I'm not saying how much he made, but he made a lot of money in crypto. And he would always post on his Instagram like, "Oh, what is that? What is this?" He's like, "Oh, I invest." I'm like, "What's investing?" So then he just told me about it. I just ended up looking about that. So I would say from 2020 to 2021, I was strictly learning about investing. I had no idea what trading was. And then at around 2022, I had some friends on Instagram, or he was a family friend, and he would always post the Robinhood app for like stock options at the time. I didn't know what that was at the time. I just see making like a lot of money. I'm like, I have this app too, but I'm not making like $1,000 a day. What is this? So then I looked up options on YouTube, and when I went to go look that up, that's when I first started my options trading journey at 16 years old. That's when I first started. So from 16 to 17, that's when I was starting to look at option trading, and I got me a little account under my parents' name, and I was trading under there.
That's great. And so you kind of like also mainly came through social media, just
Yes.
looking at the activity and the rush. And that's mainly the thing that I have seen in general. Like, yeah, you see that, people are, posting about it and there is an
Yes.
opportunity, right? And then you try to build a career
Yes.
out of it. And generally, when I talk about trading, Marcus, I consider it as a
Yes.
business, right? And it should be treated as business. But it's great to know. So you started in 2020, right?
I was investing. I was buying stock, but I didn't know what trading was. So I found trading on accident. So I was never my goal was to
Mhm.
never be a trader. It was an accident. So my goal was like, okay, investing. I know what that is. I'm gonna learn about that. So I was learning about like when the whole
Mhm.
GameStop thing happened, when GameStop was going up. That's when I kind of
Right.
yeah. So that's when I was starting investing. That's when I started learning about all that. So I'm like, okay. And then I accidentally ran into trading. It wasn't like I wasn't looking to trade. I was just learning how to invest, and it just happened to show up. I'm like, oh, this looks cool. And then just took off from there.
Great, great. And I mean, like, when you are starting your journey, in general, you see the opportunities and you get into it, and then you kind of start to learn your own lessons. Like you actually get on your own
Yeah.
journey. Um, so I am curious, like, when did the trading realities started hitting a bit, and you started to see that, hey, if I'm going to build a long-term career here, it's going to require way more time, efforts, and dedication. So if you want to talk about a little bit about that.
I would say reality hit when I was probably going into my senior year of high school, so 2023. So I didn't start trading until 2022. So from 2020 to 2021, I was investing. 2022 was when I started trading. So from 16 to 17, I was trading stock options, and I got in my first job at McDonald's when I was 16. I was getting like probably a couple hundred a week, I would say, or every 2 weeks I get a couple $100,
Mhm.
and that was all going towards my trading. At the time, I didn't know what none of the stuff meant. I didn't know what Greeks. I didn't know what I was just messing around. I lost like all my money. So from 16 to 17, pretty much every check that I got going into trading, I just kept losing and losing and losing. And after that, I was like,
Mhm.
I'm not really caring for options like that. And at the time, I had joined the Discord server, and while I was in that Discord
Right,
server, they were trading futures. I'm like, what is futures? I didn't know that. It looked kind of complicated. I saw it. I'm like, ugh. I ended up trying that out, but yeah,
right.
that was the first part of it. From 16 to 17, that's when I really realized I'm like, yo, this is like, it's not easy. I'm not gonna make $1,000 every day or however you want to say it.
Right, right. Great. And then you got into the futures. And generally, like when I was looking at your profile, I think you are more into index
Yes,
futures.
yes.
Right now, you're focused more on the index futures. So my question is that let's talk a little bit about your strategy now. That in general, like what kind of approach you take in your trading? What are some of the things, situations that you look for, before making a, actual trading decision, and, kind of just the overall approach that you implement now.
So yes, so when I start my trading day, first off, I look at the news. So I have Jigsaw. You know what that is? A trading platform, Jigsaw. They have a built-in like news channel you can look at because I paid for the version to have that. So what I first look at, I would look at the
Mhm.
news, see what's happening, the big headlines, what's going on, CPI, any data coming out. That's first. Secondly, from that, I would then go on to Sierra Chart. On Sierra Chart, I have my TPO and volume profile charts, and I revolve my strategy around auction market theory. So depending on the previous day's profile that we had, that's what I'm gonna look at to play either long, short at the high, at the low, at the value area, or if I'm looking to fade back into the middle. That's what I first look at. So that's like
Mhm.
the overall gist. So when that's pre-market. When market opens, I
Mhm.
don't trade the first 30 minutes, but I like to let the volume balance form. I like to let that form first. So once that forms, I say, okay,
That's right.
this is what we're gonna look at. So for my time, I'm on the West Coast. So from 6:30 to 7 o'clock, you're just watching. From 7 to 8:30,
Mhm.
that's I would say. I mean, I don't know if it's 100% true, but what I've heard and what I've looked at is that's the most volatile time. It's something like the first like hour and a half, 2 hours of the market. So from
That's true.
yeah,
Yeah.
so from that time, that's
Mhm.
when I look to take a trade. So what I normally look for is I look to fade extremes and I look to fade extremes at reactions. Oh no, reactions at extremes. My bad. So I would look for either a previous support or resistance area, or I look for an area where we had previous large selling, large buying at, or large orders that were filled at. Because I have a TPO chart. I can see like where the previous big orders were filled at. So then when you come back into those levels and into those areas, I will look to either play a long, a short, or reversal at that
Mhm.
level, depending on the volume that I see coming in, depending on how buyers and sellers are reacting to those levels. And I look to either fade at either like another level or when I start seeing like a momentum dial from each side of the party.
And in general, I mean, I think, it will be better for the audience, to really just learn a bit more on, how to, like, what things to consider, even, building out
Yes.
an actual strategy,
Yes.
because I think that's equally important as well. So you mentioned, like, you are looking at possibly like the liquidity areas, where, you have the previous liquidity areas, so it's support and resistances, and then you are looking for, like, the extreme
Yes.
moves, right? When, let's say, the market is kind of overextended,
Yes.
that's right, and then you want to look for, so so you are like trading contrary,
Huh?
then you are trading contrary, like you are going against when the move is actually extended. and then you are taking the trade when you see that it's fading, and you feel that the price can go in the opposite direction
Yes, but the only reason
from
for
there.
me to confirm that is if I have to look at the TPO chart first. So I can actually pull up my real quick. 1 second.
Hmm.
My strategy real quick. What I look at exactly, I can give you more clear definition.
Sure, I mean that will be great.
Got you. So right here, I have a trend day, a double distribution day, a normal variation day, a normal day, and a non-trend day. So based on the profile charts, it shows. So like, let me see. So for a trend day, I'll look for price to overside out of the previous value and hold direction to convict offense. So on a trend day, I'll look for us to have already been in trend, obviously, and then I'll wait for us to retest the previous value or low and see how buyers are supporting that level. If they're supporting that level, okay, now there's room for us to continue higher. That'll be on a trend day. I have like 6 7 days I look at. So depending on the profiles first, that's what I can confirm. Okay, I'm either gonna try to continue with this trend, or I'm gonna try to reverse it, or it just depends on the market profile that I see from the previous day.
Right. So you have your, let's say, conditions and setups
Yes.
figured out in advance.
Yes.
And that's a great habit and a great lesson also for our audience to to really learn that you don't want to be entering kind of like blindly. You want to have your data and research done first, and really the setups tested out with the right, let's say, consistency percentages, risk reward,
Yes.
um, and you want to build up that data first. I think just curious to see that how much you will agree on this. Is it better, to jump right away into trading, or maybe just do paper trade, or even work with some of these funding firms, these probe firms, and just really build out the data in real time, maybe, you know, 100, 200 data points and the screenshots, and just really see that if the edge is actually playing out in the long run, right? So what are your thoughts about that in terms of like building the data for the strategy?
So I would say if you don't have capital and if you can get the funding, then for futures I would say 100% go get a funded account. The only thing with that is that it's not like the psychological aspect to it is not the same as if you had a live account. So if you have a live account, right? Say you're throwing $1,000 into your live futures account and you're trading like one micro, that's all you can trade, one mini maybe I would say. If you actually lose, if you
Right.
lose that money, that's like wow, I actually like lost. That's my money. I just lost right now. Like I actually worked for that money and I lost it. Versus on a funded account, it's
That's
like
right.
oh yeah, who okay, I'll break my rules, whatever. It's only $50 to reset the account or to try it over again. I can just do whatever. So I would say you wouldn't take that seriously. I mean, it depends on how you have to know yourself. So if you know you can handle your emotions, you know you're like well like put together. I would say a funded account is good because you can stick to the rules and all that, and it's not your capital that you're risking. But at the same time, and you also get payouts. So you can scale faster, I would say. But with a live account, I would say
Mhm.
that once you are on there, the psychological aspect is already gone because now you're risking actual live money. Your orders are going to the market. It's not sim funded accounts. It's good like a live account with them. But
Right, right.
so yeah, that's the only
Mhm.
aspect I would say. So if you're more, I would say to learn faster, I would say go to a live account because you'll learn yourself more. You'll have to deal with the actual loss of losing your money. So you like I don't want you. So you'll know like oh yeah I don't want to make that mistake again. So I'm not gonna try to do that. I know if I do that again, I'm gonna blow my account or I'm gonna. So this is gonna happen. Versus with a funded account, okay, I can just do whatever I want. If I blow, it, I can reset it. So yeah, that's what I would say.
Yeah, I mean, I think you are on point. It's definitely a better idea to really work in real time, but start with maybe one of these funding firms. And there are a couple of good out there as well. There are some
Yeah.
sketchy firms as well. But a couple of good ones, and one of them I think both of us know, especially in the future space. It's a long standing firm. I think it's the top one, and I think their execution and platform is really pretty good as well. But yeah, I mean it's great to know. Okay, let's get into one of the main areas, which is the daily habits and routines of a trader, because discipline matters more than anything else. If you mess up with your strategy, things are not going to look good, right? And so what are your thoughts about that?
So like I'm talking about my daily habits as like a trader, like my routine, more like my routine in the day, like my routine for a trade.
Yeah, overall, like, let's say, do you have some pre-scanners, or do you have some kind of, I know you have been trading into the index
Yeah.
futures, but at the same time, any kind of even mental structures or habits or technical, you know, setups as well. Um, just in general, what are like couple of things that you want to have in your mind, in your attention, and one of the biggest things is, of course, your strategy and setup. You want to look for for the conditions, but in general, I think trading is equally, let's say, important on the psychological side, as it is on the technical and the fundamental side as well. So what do you think from a psychological standpoint? um, what are a couple of things, habits, mental structures that are necessary? Maybe like one of the things is not acting out of tilt. Like, if you're just getting the vibe or the feeling that I should jump into this, as compared to really honing in and making sure that those habits are not there. And of course it takes a little bit of time before it will start working. But what are your thoughts about that, the psychological side of it?
Yeah, so I would say that if you want to be a good trader and have consistency, you have to have the same thing in other parts of your life. So say if you want to be consistent, you want to build a track record, you want to have the ability to be consistent. You have to be like that in every area of your life. So I would say for me personally, I do train 4 to 6 times a week at the gym. So I would say that's like a part, like a habit that I have to keep my body going, keep me awake, keep me alert. I do try to have a
Mhm.
strict diet. I drink black coffee every day, no cream, no sugar, just like little things like that. I do take cold showers. I know everyone makes fun of those, but I do take cold showers. So like building those small little
Great.
habits in my life can carry into trading because if you can't control like your day to day stuff outside of trading, then trying to come into trading, risking money, which is like one of the most valuable assets people idolize, then that's gonna like pour into it. You won't be
Right.
able to succeed in the long term. So I would say
Right.
make sure everything else in your life is balanced. Make sure you're if you whatever you believe in, Jesus, Muhammad, whatever. If you want to like have like spirituality, have all that. Make sure everything in your life is already aligned, and then
It's aligned.
and then
Yeah.
it can same thing
Mm-hmm.
happen with the trading. If it's not aligned, if your life's not aligned, you're all over the place. That's the same thing how your trading is going to be. Because that's how you trade everything else in your life.
Couple of great points there. I think I'll agree on most of those with you. So I think like one of the ways to look at the psychological side of it is, let's look at your process of handling the losing streaks. I think that will be very, very interesting to know. So let's say if you are having a couple of losing streaks, um, and things are just not looking good for a couple of days, or couple of last few trades. How are you handling those? Because that's also another area where especially the new traders, they will start searching for holy grail, and they'll divert away from the current strategy and go for another one, look for another indicator in the market, check out another video, or join
Of course, or
another chat
yeah.
room. Yeah, chat room, Discord server, something. But in general, how do you handle the losing streaks?
Yes, the way I when I first started out, I would say I was one of those people. I would go to maybe the study doesn't work. Let me hop around, learn that. But what I realized is that even the best traders on Wall Street, the best top traders, they have losing streaks. That's what I was learning about. Even the traders of the firms, they all have losing streaks, and the way they look at it is like it's a business expense. So it's kind of like okay, some even in any other business that you look at, you have ups and downs. You have like hot periods, slow periods, but overall, like over the year, if you stick to your plan and stick to your rules, you will come out profitable. It's bound to happen. You can't nothing we can really do about it. Obviously, if it's like
Mhm.
obviously if you lose like if it's going to like a negative, I would say it's like the whole year, like long term, you see it's like going down. Then I'll say okay, maybe change it up. So if it's like a short term losing streak, like a few trades or whatever like that, you'll be okay. That's part of the strategy. Is going to happen. No win rate or strategy is 100%. Although you can improve your edge by having different things in place and by having different things like that you do, but overall it's gonna happen. And like the only excuse I would say to change it is like long term. You see, okay, now I'm going into the negatives. Now I'm performing now. I'm performing worse than I have been the past 2 years. Now I might be to look to tweak a strategy or not to fully change, maybe just to tweak it around. But if it's like short term, that's when we know, okay, this is part of the game. This is gonna happen. My strategy, and especially if you have data to back your strategy, you know, okay, my strategy works. Just like this might be a slow time frame, and
Right.
it's gonna come back up.
Right. So you are generally like you are considering it as uh, let's say business expense, and that is the cost of operating into this
Yes.
business, and and no matter what, you can never avoid those days and those losing streaks. But I think there is a very thin line, Marcus, between having your losing streaks and handling them versus really knowing whether your strategy is actually having an edge, right? And so, what will you suggest? Like, this like number of, let's say, there are 5 trades in a row, 10 trades in a row, and then or 20 trades in a row, 30 trades in a row before you want to revisit the strategy or maybe take a step back and really test out everything and then come back in again. Um, because and I'm purely talking from the perspective of the new developing traders,
Yes.
right? Uh, it is possible that they haven't built the strategy so far. So it's like kind of and let's even we can even go back in your journey as well and see that was there a rule of thumb when you were like, okay, let me take a step back and check my strategy now, because you have been into it for a couple of years, so you are more in tuned with the market, with the setups, um, and you can really figure out that I need to take a step back. But what about new traders when they should like stop and say, okay, let me just go back a bit and just go back to the drawing board and look into it again? Yeah.
So I would honestly say it depends on your risk to reward ratio. I know people don't like to hear that term, but like for me, the way I look at it is that I still go back and look at it. But I believe you only need like a thirty
Mhm.
percent, like a low 30% rate to be considered profitable. It depends. I think it would a 3 to 1 R. I believe you need like only 30% rate to be profitable. So I would look at your win rate percentage. So I would say if you have a 2 to 1 risk to reward trade, then you obviously want to try to get 50%. So I would look at it and see what is my risk to reward ratio. So I would say like if I'm always going from 5 to 1 or like 6 to 1, like crazy big trade like that, I'm like, yeah, your win gonna you may only have like a 20%, 25% rate, but your win's gonna be way bigger. So if you are a trader and you are trying to attach the biggest moves and like the risk, like I don't know, like $200 to make $2,000 or something crazy like that, then okay, you're gonna have a lower win rate, but you're also gonna have the wins are gonna be bigger. So it all comes down to your win rate. So for me personally, I don't have like a set RR that I target or I try to go for. I risk the same amount of ticks and actually no, not risk the same amount of dollars but different ticks every single trade that I take. So for me, I just try to target extreme. So I may have a win rate one day of like 3 to 1, 4 to 1, 5 to 1, or 2 to 1. But I would say honestly,
Right.
I try to make like double back of what I make. So I would say 2 to 1 minimum, and then anything over that, I just let it scale, let it go out, and try to target this stream. But the biggest I've had was probably like a 12 to 1. I would say for a trade. But that's like that never happens that often. But like I would say, try to find your win weight.
True, true. Yeah, yeah. Those are rare opportunities, though. You don't see those kind of trades coming. I mean, when the volatility is really good in the market, then I think you can be presented with much more better risk to reward opportunities. And I'll say that I think using risk reward and risk management and these terminologies, I think these are important because at the end of the day, your numbers are speaking there on the screen, and you want to be sharp on your numbers and make sure that your consistency percentages and your risk reward is still coming through, and that is kind of like a good area to track as well. So yeah. Okay, I mean, it's really great. And another area that I want to get into is your advice and maybe your suggestion on what are kind of like some common misbeliefs or misconceptions around trading in general, or we can even say like the expectations, uh, because like when a new trader is actually hitting the system and they are starting to trade, their expectations are through the roof, right? But you get the lessons pretty quickly. um, what are your thoughts about, and maybe just a couple of common misbeliefs or misconceptions that we should just avoid from day one, so that we are better aligned in terms of what we can expect back from the market.
I would say first off, do not think you can like turn a small amount of money into a gazillion dollars. That's not gonna happen. Another thing that
Right.
I would say is that it's not a get rich quick scheme. So even like the data itself, you can look at like I forgot 99% of traders or 90% of traders don't last after like a few years, whatever like that. I have to look it up again, but the chances of you
Yeah, yeah.
making a career out of trading is not like it's not likely. So yeah, first that's the first thing I would say. So coming here and say like the odds are already against me off the bat. People can't make a career out of this like this. It's not as easy as I think it is, but it's possible you put in the work and if you do it in the long term. So for like people like me and you that have been doing this for a long time, we know it's a long term thing. So people that come in thinking they can be, okay, actually, I'll take it back. You can be profitable in like a year or two. It's not likely though. It's not common. But the people that want to come
Right.
in here and try to make $1 million, that can happen. But the chances of it happening and the chances that you stay that long are super, super low. So I would say, first off, don't come in here thinking you can come in make $1 billion. Don't believe all the I'm not gonna say names, but people you see on TikTok driving
Right.
the nice cars and the penthouses and all that. You can get there, and people are like that. There's all people that are my age that are young that do have that, but it's like a very, 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 very small fraction of people that have that. So I would say when you come in here, if you're not ready to put in at least 2 to 3 years, try to even try to even like be considered somewhat profitable, I would say don't even try at that point. If you can't dedicate yourself for like 2 to 3 years to a skill or a craft, then I would say just don't even waste your time because it's gonna be a long journey. But if you do stay through the long run, you do pull it off, and you do beat the odds, I would say this is probably like the best career you can have. Like there's no other skill in the world. Even NBA players, athletes, anyone you can look at, they can't wake up and press a few buttons and make thousands of dollars in a few minutes. No other career can do that. So I would say it's a fulfilling and a good reward and a good skill to have that you pretty much can't unlearn. And I would say that if you're ready to put in the
Right.
work, then you can get it.
Right. And so, I mean, what you are saying here is like really having that long-term perspective and, just shy away from any idea of, becoming, making a lot of money really, really quickly. I think that is really the bottom line. And just focusing more on becoming better and really refining the strategies and systems and building out, let's say, the numbers and data. I think it's just gonna make things a little more easier. Although trading is never easy, but yeah, I mean, you're definitely right on that front. Great, Marcus. So, what's that one thing which is most important to you as a trader? Like, if let's say if you'll say that, hey, this is one of the things which has really helped me in becoming a great trader and consistent trader and growing trader, what is that one thing that you'll point out that has helped you more than anything else?
I would say, can I say two things? I have two things.
Yeah, sure.
I would say the first one is auction market theory. So I know there's a lot of different strategies out there, ICT, smart money concepts, supply and demand, and I do use supply and demand, but to a degree. But I would say if you don't know auction market theory, if you don't know how the market even works, what an auction is, how the markets do, what makes price drive, what makes price fall, I would say learn that. That's like the
Mhm.
outline. So I would say the outline first. I would even say watch. I would say learn about like candlesticks first. Like that's the basics. Like learn that stuff first, and once you have registered that, immediately learn auction market theory. Because that'll save you a lot of time. You will know why the market's doing what it's doing, what it can do based off what it's shown us before, and using TPO and volume profile charts. So that's what I would say is the most. And then secondly, once you have that understood, I would say learn order flow 100%, or incorporate some kind of order flow in your strategy. Because I personally believe that order flow, it's not the holy grail, but it gives you like the best edge that you can have as a retail trader, I would say, because you can see inside the market, you can see where the actual liquidity is. You don't just say, "Oh yeah, we sold off here," but why do we sell off here? What was at this level that made us
Right.
sell off here? So I would say, learn auction market theory, learn order flow. Those are the two best tools you can use as a trader.
Right, and the you mentioned about the order flow and then learning the basics and then really understanding the market structure. That's something that I personally incorporate in my trading as well. In the I predominantly I trade in the equities. So let's say the U.S. Equities and then a couple of other global markets as well, but mainly focus on equities and stocks, um, and both intraday and swing opportunities as well. And but you're right. I mean, really understanding the basic structure, the order flows, the liquidity areas, and instead of just assuming, you want to figure out why something is happening in the market and then building the data around it. I think that is definitely one of the important areas. um, Great, Marcus. I think it's great chatting with you, and we are almost on the timeline here. So my one last question will be where traders can find you, like some of the new traders, if they have any quick question. Just want to get in touch. Where they can find you online, on maybe on LinkedIn, Instagram. Yeah.
So for my LinkedIn, my name is Marcus Ricard, MarcusRicard. That's for my professional business page, and I do have social media that I do content on. I do other stuff on the side. I don't only trade; I do other stuff on the side too. So my Instagram or all on all platforms, I was Marcuza. So MarKooza, on all platforms for my content.
Great, great. Thank you so much for sharing about that. And I think it's a great conversation, Marcus. I think we are on a timeline here as well, but at the same time, I think you have really dropped a couple of great insights, especially for the new and developing traders. The basic things they can keep in mind, and the risk management, and not jumping right into it, but building out, let's say, the system and the setups, and knowing exactly when to get in, get out, and knowing your numbers. I think that is the bottom line. And so I think there are a couple of great insights here, and I hope the audience can actually learn from there. And it's great chatting with you.
Of course, thank you. It was nice having me. I appreciate you for having me on.
That's it for today's episode, everyone, and I'll sign off here. If you enjoyed the show, make sure to hit the like and subscribe button and share it with your fellow traders as well. I'll continue bringing on great guests so you can gain insights that help you make more informed and smarter trading decisions. See you in the next episode, and until then, be great.